Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of High Tide, ticker symbol HITI, which closed on the day Tuesday, June 25th at a price of $2.20, being down a little over 3% on the day. And it does look like it broke below this 50% retracement level at a price of $2.21.2. But it could be a fake out, and I did want to go over that because I do think that it will be making a higher low than the low hit on April 29th, which was at a price of $1.92. And so I do think that there could be some great dip buying opportunities in the near future if we are not already at that price. And so, the reason why I think that it might be turning around is if we do look at the highs here, we did form a lower high. So not that great in that sense, but we also did form a lower high in the RSI. So there's no bearish divergence there. And so with that being said, let's look at the lows to see if we have been forming higher lows in the RSI like we have been with the stock price. And it actually looks like the RSI did form a higher low over here, just like it did in the stock price. But we are basically back at the same level that we were at the beginning of March when we were hitting the lows over here. So the same level with the RSI, whereas the stock price is much higher. And so that is, I believe, hidden bullish divergence forming higher lows, whereas the RSI forming lower lows. And, while we are at, even lows, not necessarily breaking into lower lows with the RSI, price doesn't need to come down much more for the RSI to break notably lower than it was at the beginning of March. It is currently at 38.22 over in March. It hit a low of about 37.99. If the RSI were to dip to 30, I would think that would represent a great dip buying opportunity, and that could coincide with revisiting the 618 here, which is at a price of $2.06.2, or right around $2 a share. That also does correspond with the red line here at 199, which was the high hit on January 30th. And so we might be retesting that level. However, one thing that makes me think we're not actually going that low is that on this pullback here, we bounced right around that red line at 199, dipping down to 193, which was the high hit on February 20th, got a wick just below it, going to a low of 192 on April 29th before bouncing up. So I do think that we will be putting in a higher low than we did in April. And I do think that level could correspond with the 618 at 206, if not the 50% level where we're currently at, right around $2.20. And then one other thing, since this is kind of an older retracement, one thing that I can do is draw a Fibonacci retracement from the low here up to the high here. And so, like I said, that low is at 192 and then going up to the high here of 272. So I'm just going to draw that kind of approximately here and then adjust the levels to 192 and 172. And so now that I've got those marked, I'm actually just going to adjust the color to yellow so it stands out relative to this prior retracement. And so with that being done, we can actually see that the golden pocket here, the range between the 65% retracement and the 618, that does mark the golden pocket. Price is right around there, and that ranges from 220 to 222.6, corresponding beautifully with that 50% retracement from the white retracement. And so I think that this could definitely be a bottom, but if it doesn't hold, if it does break lower, the 786 is at 209, being just above 206 from the previous retracement, that 618. So maybe that is the bottom that we will be seeing forming right around that range, 206 to 209. But I could definitely see this going up from here. But actually, let me take a step back thinking about this relative to the RSI, I think if the RSI dipped to 30 and that corresponded with price being at the range of 206 to 209, I would think that's an excellent dip buying opportunity. But yeah, I think that dipping down maybe 10 more cents, 15 more cents to get into this range, that would be an excellent dip buy. But if that doesn't happen, if we are forming the bottom now, maybe if one wanted to add or establish a position in high tide, maybe this would be a good time to establish a quarter or maybe a half a position and then add the other quarter, half, or 3/4 of a position down in the range of 206 to 209. See if that holds, or, maybe leave some on the side still if in case it does come down to $2 a share. But I do think that this level that we're at right now, it does stand out as potentially being a level of support, but then there is a secondary level between 206 to 209 and a tertiary level right around $2 a share. So those do represent good dip buying opportunities if this level doesn't hold. But if it does, I could see price taking out these highs of 285 that was hit on April 4th. So do keep that in mind. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.